Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update on West Red Lake Gold Mines. West Red Lake Gold is traded on the TSX.V under the ticker WRLG and on the OTCQB under the ticker WRLGF. And we are joined today with the Vice President of Communications at West Red Lake Gold, Gwen Preston. And Gwen, it's always great to get you back on the show for an update. We've had a lot of questions that came in about the company, about various things. We're going to dive into this rapid fire for you listening in. And I guess I want to kick it off with the news that you put out to the marketplace just on October the 7th, earlier in the month. And it was really just a report on the third quarter operations. There's a lot of different areas we want to dive into, but just from a general sense to kick us off, Gwen, how is it going underground as far as the development, getting stopes opened up, moving the trucks around, testing out that connection drift? How is that part of the operations going?
Yeah, for sure. It's a good place to start. It's the heart of the operation, right? And it's a good place to start because ramping up this mine in particular is about getting more tons of ore out the door. Wow, I feel like I was Dr. Seuss in that sentence. Anyways, it really is though. It's about increasing the mine's ability to get more tons of mineralization to the mill. And that ability rests on a couple different factors for sure. It depends on our teams getting more efficient. And so, with the same, we have the workers and most of the equipment going underground right now. So using those same workers and equipment, having them mine more tons and move more tons on a daily basis, that's part of ramp up. Another big part of ramp up is the balance between focusing predominantly on mining and also still having to focus on some development, still getting into new areas. There's always development that has to happen in every mine because you finish one mining area and you move into another. But during ramp up, there's more development than is average during the mine life. And so there's still that balance that accounts for some of the ebbs and flows week to week for sure and month to month. In our ramp up to date, sometimes we're working more on development, which is to say mining rock that doesn't carry gold, because that's what it is to drive tunnels over to an area where the gold does exist so that you can mine it. So that's part of the balance of ramp up. And then another part of the balance of ramp up for us specifically has been waste rock, which sounds like a pretty boring thing to talk about, but I'm quite excited about it. So, at Madsen, for every ton of ore that you bring out of the portal, you've probably had to move a ton or maybe more than a ton of waste rock. That's that development, right? To get to the area. The ratio will change a bit, area to area, but that's the way it is, especially at this stage of the game for us. It's actually been maybe more than a ton of waste for every ton of ore. And so until very recently, we were moving somewhere between 300 and 1,000 tons per day of waste out of the mine. So that's a lot of trucking. If you think about our trucks carry 42 tons, and when they're coming up from 500 meters depth, which is where a lot of our mining is happening right now, that takes an hour for that truck to go up and dump those 42 tons. And then we were having to do that a lot of times in a 24-hour period. But we are now, as of a few weeks ago, able to store all of our waste rock underground. So we no longer have to do all of that trucking of waste rock. And we're able to do that because this is obviously we are mining around historic mined out areas. Most of those mined out areas, the old timers shoved their waste rock into their voids. We were aware that there were some voids that were not fully backfilled. As we got to depth and were able to assess those voids, we found out that some of them were less backfilled than we expected, which is to say there was more volume in there. And so we've been able to start putting our waste rock into these voids sooner and at larger scale than we expected to be able to. We thought we were going to have to create our own voids before we could really start storing waste rock underground. So that's a really significant advantage, since I say the critical path for the Madsen mine is getting more tons of ore from the mine to the mill. The fact that we don't have to be moving all those tons of waste, really significant step forward for us. And we're expecting another similar step forward in about a month when we get our shaft going. That will move 350 tons per day out of the mine via the shaft instead of having to truck those tons. So these are really important aspects of how the operation works that we are excited are coming into play. And certainly we want to have those in place before we, say the mine is running the way that we want the mine to run, which is, the layman's definition of commercial production.
So, Gwen, let's start from that high level then. Since it is a lot about how many tons of ore are mined, you have figure one in that operations update that goes back to December of last year and shows the tons that are being mined. And generally, it's been increasing. There's variability in there. Is there a certain target or a forecast you can share with us to where you reach what is reasonable, what could be then commercial production in terms of the tons of ore that are being mined and the increases we could see through the next few months?
Yeah, for sure. I mean, our goal is to have this mine operating at 650 tons per day. And we feel pretty confident that we've been stepping towards that. And now, with the waste rock management and the shaft coming online, we're very confident that we're going to be able to step to that level ahead of our goal of declaring commercial production right at the beginning of 2026.
Well, and another thing that was a bottleneck for the previous operator was the grade reconciliation when you pull it out of the ground and put it through the mill. Maybe walk us through how that part's going, because it's one thing to get a bunch of ore and throw it through the mill. It's another thing to see how it's recovering.
Absolutely. Yeah, for sure. The grade reconciliation is really good. It has remained strong as we've ramped up, which is really important because it's easy for quality in any, I think, venture. It's easy for quality potentially to slip as quantity increases, right? And so we've really kept our eye on that prize, and we're very comfortable with the grade reconciliation. And so, yeah, we are confident that our model, our geologic model, tells us where the gold is with sufficient accuracy and resolution, and that then our mine engineers, develop a plan and our miners go in there and mine it. And so, yeah, we're doing well on grade reconciliation.
How about cost controls then? Obviously, not having to truck all the waste up would save you money, but we've also been talking a lot about how energy prices have actually been dropping. That's usually good for operating mining companies. What can you tell us about the cost controls so far as you've seen month over month?
Yeah, for sure. I mean, energy costs are a great conversation to have for us right now. Underground mines like Madsen, especially in jurisdictions where labor is not inexpensive, like Canada. I mean, Madsen is a fixed cost mine, which is to say that, two-thirds of our costs are for labor and energy and equipment and maintenance and things that you can't vary, right? They just are what they are. They are, they are at the level that they are to keep the thing ticking. And so the way that you manage your cost per ounce is by managing your number of ounces. Basically, that's why I say the critical path is getting more tons out of the mine. We know that there's going to be grade in those tons because we're confident on the reconciliation. We just got to get the more tons out. As for cost, I mean, for us, they're trending in the right direction. That's the other aspect of ramp up, because you're managing an operation where not all of the pieces are yet operating the way they're supposed to, like before we had the waste going where we wanted it to go, like we still don't have the shaft going. Like we're still having to do more development to get to areas than will be normal course of business once we're up and running. Costs during ramp up per ounce are always going to be higher than, what you're gunning to get to. We're pretty confident. We're confident that our costs are trending in the right direction, and energy costs is one of those fixed costs. So if it's going to slide down for us as we are working to get this thing ramped up, we'll take it. That sounds good to us.
Yeah, nice to see at least that component going down. But the other thing that's happening is gold and silver prices are going higher at the same time, maybe higher than people even expected or modeled for. So that's another kicker. But we were getting to this critical point for the company where, as you lined out there, your costs are starting to come down. The development work's starting to get to where you need it. Once the shaft is working and that's taking some pressure off, and you've got the waste part going, all of this is building towards, what's coming, Gwen? Commercial production. I get a million questions on this. Maybe not a million, but a lot of people writing in. When will it be commercial production? When can they talk about the revenues? When? So walk us through what has to happen to get it to where it's dialed in, where you feel comfortable declaring it.
Yeah, for sure. I mean, and it's a good question. It seems like commercial production is something that should have an industry-wide definition. Like you achieve X, Y, and Z, and then you are in commercial production. But actually, there isn't a definition of it. And that's because mines are so varied. I discussed how the critical path for the Madsen mine is getting more ore tons out the portal. That is not the critical path for every mine. Other mines have to deal more with their mill performance or with some sort of, ground moving operation, a tailings dam lift. Who knows? There's lots of different aspects of an operation that can be the critical path. And so for each operation, commercial production is the mine is operating the way that you want the mine, you expect the mine to continue operating, right? It's because you've gotten it to the point that it is the thing you said you were going to do. That's sort of the best description that I can come up with. And so we actually started putting a fair bit of thought into that over near the beginning of the third quarter, because people were asking us the same thing. Okay, you're ramping up. When's commercial production? We're like, yeah, well, what is our goal post for that? And for us to have this mine operating the way that we want it to be operating, we wanted to figure out our waste rock answer. When and how and to what degree were we going to be able to store waste rock? That's now been answered, and that's came up with a very good answer. We want to get the shaft operating because we knew that we were going to do that. We made that decision round about the same time that we turned on the mine. We realized that the shaft, as it is with the rehabilitation that we did last year, would be able to start operating for us again once we put some new components onto the hoist. And so we want to get that going. We're literally waiting for those hoist components, and then it will start operating. And then we also want to get the last few pieces of rolling stock, which is literally the equipment that has wheels, on site. And some people are like, well, why don't you have that yet? Well, you can't just order a 42-ton truck and have it show up the next day. There's usually a many months wait between ordering and taking delivery of major pieces of equipment like that. So we're waiting for one more 42-ton truck. I think 2 more scoops are coming in the next 2 months. So we want to make sure we have all of those on site as well, so that we can be moving things around the way that we want to move things around. So that's like the operational side of the question. The other key thing, of course, when you declare commercial production is what you referenced there, which is that, you open up your books. You say, here's what we will produce over the next year: tons, grade, ounces, cost. That's not, that's for market facing, like that's probably the most important component of announcing commercial production. So we need to make sure that our mine plan, our detailed stope by stope, ton by ton mine plan for 2026 is complete. And we're almost there. We're probably like a month away from having that complete, maybe even less than a month at this point. So that we can declare with complete confidence those tons and grade guidance. We want to put that out there and know that we can, that's exactly what we're going to deliver. So we're very close to having that ready. And then once all of those pieces are in place, then yeah, we expect very, very early in 2026. That's our goal for declaring commercial production.
Going a lot of the market too, whether right or wrong, ties in commercial production with profitability too. What can you tell to those people that say once they announce commercial production, means that they're profitable and they're going to be cash flowing?
Absolutely. I mean, we as a team, as we put that thought into our definition of commercial production, we needed to be comfortably cash flowing by the time we declare commercial production. Otherwise, I'm not sure why we would have turned the mine on, right? If our definition is that commercial production is when the mine's operating the way that we want the mine to operate, well, that operation better be making money. So for sure, by the time we declare commercial production, you should expect that we are comfortably in positive cash flow.
Well, and while we're on the topic of cash flow and revenues and profitability, a lot of people had questions about the capital raise that came out. It was actually upsized to 41 million, and you announced that on September 23rd. Now, some of that has charity flow through, which typically goes into the ground, so maybe that ties into the exploration budget. But walk us through why the funds were raised. Some people thought that the last raise, you had some optionality built in there and some wiggle room, so they were confused as to why there was another one. But break down the thought process here.
Absolutely. I mean, we'd been saying since our February financing, we'd been saying the same words, and they were quite specific, which is we believe we have the capital and cash flow to get the Madsen mine into production as per our plan. And those were the words that we said over and over again. And that remained true even as we opened up the financing. And so why did we finance if we believed we had the capital and cash flow to get the mine into production as planned? Well, it really goes back to why we're doing this in the first place. So West Red Lake was started because we believe that the best way to generate leverage, so outperformance versus peers, in a rising gold market is to grow from a small new producer to a mid-tier producer. That's like what Frank Justra has done many times before with great success. That's an uncommon thing often in a gold market, and I believe it will be in this gold market because you come out of a bear market and there's not very many new juniors with projects that are able to be put into production. Lots of projects have lost momentum in the bear market. So there's often not very many companies able to offer that growth. And when you go from small to medium, then each new ounce that you produce has significant impact. When you go from medium to large, each ounce has less impact. So that's always been the goal for West Red Lake, is to grow from a brand new modest scale producer to a mid-tier producer during this gold bull market. And you never know how long a gold bull market's going to last. We can hope that this one will last a long time, but patterns are patterns. And so we are really encouraged to add growth as quickly as we can to generate that leverage for our investors. So if we waited until we had the good cash flow to do some of the additional projects that gave us the ability to increase production at Madsen, then we wouldn't have started those until like the middle of next year. And that's actually a long time from now in the scale of a gold market. And so we wanted to pull forward a power project, which is sending a third power line down into the mine, a ventilation project that enables us to move more ore because you can move more air. We wanted to pull those forward. We wanted to get them started now instead of later, so we have the potential to produce more sooner at Madsen. I think another one to look at is, the Madsen deposit as we know it is defined down to about 1,200 meters depth. The similar deposit in the Red Lake mine down the road goes to 3 kilometers depth. We have scattered intercepts below our deposit. We have lots of reason to believe that our deposit continues strongly at depth below where it's been mined before, and that there's a lot more to give at Madsen at depth. If we want investors to have exposure to that upside in this gold market, we got to get deeper sooner and drive out laterally so we can start drilling down there, so we can start to understand the potential down there and talk about the potential down there. Because if at some point you drive another shaft up so that you can move mineralization in a reasonable way from that side of the deposit. And then if you're going to drive another shaft, what does that do to the scale of the operation? You got to start getting down there before you can start understanding what kind of an operation you're building to tell the market that story, so that they can price you to that instead of to the modest initial operation that you got going. We've seen this happen with Island Gold, like with Windfall. These are projects where, you start small, you realize the scale of it at depth, and the market actually gives you a lot of value ahead for what's coming because it's impressive. So these are the things that we wanted to start early. And of course, if the strong gold price and or a smooth ramp up, both of those things means that we end up with, it's a funny thing to say, more capital than we needed in the first half of 2026. Well, we have a $35 million debt facility that we would love to decrease, because the reason investors like rising gold production is for the free cash flow that it generates in a bull market. And so to get more of that, you reduce your debt load. So we just found that there were multiple strong arguments for accessing this capital now that all feed our thesis on how to generate returns for our shareholders.
All right, so it sounds like this is growth capital. So you could be producing more in the, I guess, more near-term aspect of it. And hey, look, right now, capital's available. So I guess raise it while it's there. But curious how you put this $63 million initially, upsized it to $41 million. How you put that number. Does that then cover this growth initiative that you just outlined?
Yeah, for sure. I mean, this isn't capital that we are putting to work to get the Madsen mine up and running the way that we said we would. We already had the cash flow to do that, and a lot of the pieces are already in place. And so given the fact that we're almost through the ramp up, it's already October, we're talking about commercial production, in less than 3 months. And then, then there's cash flow from there, plus this additional capital. Yes, for sure, that we do not expect to raise additional capital for the Madsen mine. Oh, and I should note also, you did raise before that there was $5 million of flow through as part of the raise. Those $5 million are for the Rowan project, because Rowan is, a project where we can spend exploration expense, CEE flow through, which is what this money was. And Rowan is a really important part of our growth profile, right? This is a project where we believe we can be producing mineralization, or it's not called that yet because it only has a PEA, but we can put this thing so that it's sending tons, mineralized tons out of a portal by the middle of 2028, and like trucking that mineralization down to Madsen for processing. And as that happens, we're talking about adding 35,000 ounces a year to our production profile. So we're very motivated to keep Rowan advancing as quickly as possible so that we can keep it on that time frame. Again, it's about charting a path to significant production growth as soon as possible so that our investors can benefit from that.
Well, I think that a lot of people have underestimated the importance of Rowan, and I know you're working towards a combined economic study for next year that'll highlight that. But 2028 is not that far away to have mine number 2, a satellite area, feeding the beast here. But there's still a lot of exploration at Madsen, so I think Will would be disappointed in us, Gwen, if we didn't at least say, hey, there's a lot of potential still at Madsen. That's why you're there in mining. So give us just a quick snapshot of the blue sky upside at Madsen.
Yeah, for sure. No, I'm glad. I'm glad you said that because Will would be very upset if we didn't talk about that. I mean, I think the best short way of having that conversation is to just reference the drill results that we put out last week, I think on October 9th, if I'm remembering my days of the week correctly, which was high-grade drill results from a new area within our deposit. And so, like, the way that I like to frame this conversation is the Red Lake mine down the road that turned Goldcorp into Goldcorp has operated for something like 80 years. A lot of those years have been very, very good years, and they're very good years because they find these pockets of particularly strong mineralization, often around the edges of the deposit, sometimes in the middle of the deposit. And those really strong tons, with high grade gold, amp up the production profile at a fixed cost mine. And so, bam, you're making more gold at the same cost. That's what grade does. And so that Red Lake deposit reliably churned out those pockets of high grade mineralization. West Red Lake found its first version of that at Madsen over in South Austin with those drill results that we put out through the first half of this year. And the reason that we targeted that area of South Austin is because there's a lot of data for this deposit, 1 million meters in our database, right? If you include all of the old timers meters. And that gives our geologists a lot to work with when we're saying, okay, which areas should we go in and test to see if they host another jewelry box like that? That's how we found that pocket at South Austin, and that's why we targeted this new area in Lower Austin. And these are our first drill results out of this area, and they're very, very good. And so we think we've tapped into another sort of jewelry box in Lower Austin, and we have lots of those kinds of targets. We have areas that we want to go to because we believe the Madsen mine will keep kicking out these pockets of super high-grade mineralization like the Red Lake mine did down the road. That's the reason that we're here, for what the Madsen mine is as we know it, and for what else we think it has to offer as we do more drilling.
All right, Gwen, thanks for fielding all of these questions. I hope that has answered a lot of the questions I know a lot of the ones that we get sent to us. What should we watch out for? What other news is on tap here, just so I guess everyone can confirm that everything you've laid out for us, all the development and even the exploration, is going according to plan?
Absolutely, yeah. So we will push towards that commercial production decision early in next year. I expect that we'll announce the start of drilling at Rowan sometime soon, and that'll give us another nice opportunity to talk about the importance and the potential of Rowan. Ongoing drilling, we always have 1.5 to 2 drill rigs turning, and this new area in Lower Austin, there's one area we were really excited about. There's another one up near the connection drift in an area that before the connection drift existed was not accessible for drilling, that we've been drilling in. So we're pretty excited about that area as well. So drill results, the push towards commercial production, work at Rowan. Yeah, well, we will continue to keep the market appraised of all of the things that we're doing to get this mine off the ground in its initial version and then turn it into more as quickly as we can.
Well, there you have it, folks. It's a big update from Madsen. The ramp up towards commercial production by the beginning of next year. Moving waste rock, moving ore, processing at the mill, getting good grade reconciliation, drilling at Madsen, drilling coming up at Rowan. Lots going on with the company. So if you want to follow along with all the news flow on tap, definitely click on the link below in the show notes. It takes you right over to the West Red Lake Gold Mine's website, straight to their news section where you can sign up for updates that hit your email inbox or just follow along with the news as it's released. Gwen, keep us posted. I'm sure we'll be getting you back on a lot to keep giving us updates. And as always, looking forward to our next conversation.
Thanks, guys. Thanks so much for having me.